What up, gang, man? It's your boy Chris Garcia coming to you guys again, aka Crypto Godson. Before you do anything, please press that like button and also subscribe if you want more valuable crypto content. I particularly love to go over altcoins and the relation between Bitcoin. So if you're interested in that, please be sure to subscribe and make sure you click that bell. But today I'll be going over how to trade in crypto and particularly how many ways there are to engage in the crypto market, how to make money from crypto, and so how to make money in crypto, how to buy crypto, and how to earn money from crypto is a very deep topic. From the outset, you may think buying crypto is very simple, just buy Bitcoin and hold, or you may come from it from a forex perspective, where you just you're trading on MT4, or maybe you're real deep in the crypto market and you already know what yield farming is. I want to go over all that with you guys. Particularly, I want to make the transition from stock market forex or from no financial background at all easy for you if you're getting involved in the crypto markets. Today, I think I'll be covering quite a few things. Hopefully, you can learn something from me. And if you can, also, if you know something else that I'm not covering that I missed today, please be sure to let me know. So, without further ado, I'll get started. Smash that like button, please. I will appreciate it. Thank you. So, first, options. So options are a financial instrument that are derivatives based on the value of underlying securities such as stocks. That may sound pretty confusing, but there's two ways: call options and put options. So call options allow the holder to buy the asset at a stated price within a specific time frame, and put options is the opposite. So to sell the asset at a stated price within a specific time frame. So the way I think of it is simply, if you put a call in, that means so for instance, Bitcoin, you can put a call for Bitcoin. So if I think Bitcoin is going to be 30,000 by January 1st, 2021, I need to put a call option. So I'm betting that Bitcoin will hit this certain price by this certain time. And then put options is the opposite. So I think Bitcoin is going to be at 15,000 by January 1st, 2021. So it's just the opposite. So you're betting on the future price at a certain set time. That's how I look at options. Obviously, there's more in-depth analyses out there, but that's what options are. And it's essentially it's a contract. So you lock in at a certain price, and there's the option to basically realize it before the end, or if you can sell it to somebody before the expiration, basically. So you don't always have to hold it all the way till the end. That's my understanding. I haven't traded too much in that. If you have any corrections for me, definitely please let me know. But I will put the links below for all these links moving forward for the rest of these explanations. Next, over the counter OTC. So for most of us watching this video, we don't necessarily have to know what over the counter is. This is mainly for like honestly for really high net worth individuals and companies. They use over the counter mechanisms to purchase their crypto because they don't want to affect the market price. And what that means is, so securities that are traded over the counter are traded via a dealer network as opposed to on a centralized exchange. So if I purchase on an over-the-counter dealer, if I purchase something OTC, it will not be reflected on the market because it's like basically a middleman. So think of actually like these big entities like Grayscale, and Grayscale is probably the best example I can think of right now. And institutional investors want something very stable and want to be go to a accredited source to purchase their Bitcoin, and they also don't want to run the price up when they buy the Bitcoin. So they can go to like Coinbase custody, or they can go to Grayscale and purchase their Bitcoin there. And like it says here, it's a broker dealer network. And so if you want to buy really high amounts of Bitcoin and you don't want to affect the price and you want to reduce your amount of slippage, meaning if I want to buy $100 million worth of Bitcoin, I want to make sure I get it at a set price and it's not I'm not basically getting 80 cents per dollar. I want to make sure I get I want to make sure I get the most bang for my buck. I would purchase OTC. Next, margin trading. So this is where we get a little bit risky. Margin. So what is margin? Margin trading refers to the practice of using borrowed funds from a broker to trade a financial asset, which forms the collateral for the loan from the broker. So this is a way of using leverage. So a lot of you guys that come from the forex space already, you trade margin when you're trading forex. But for the most part, everybody does. I believe. I don't even know if you can without trading margin on forex. If you guys are familiar with MetaTrader 4, that's a form of margin trading. And you're familiar with brokers like Hugo's Way or what's another one? I don't really use any other brokers. Slipping my mind, but Hugo FX is a broker that offers crypto. So like here you go right here, obviously Bitcoin, XRP, Litecoin, Dash. So if you trade, currencies, the US dollar, euro, the yen, the British pound, um, you can trade the fluctuations between cryptos as well. This is a form of margin trading, and so you don't ever actually own any crypto when you're trading on MetaTrader 4. You're just trading the fluctuations. You're just trading, a value. So that's something to keep in mind there. There are other ways to trade crypto on margin with this platform called Bitfinex, BitMEX, or even FTX is another one. I don't particularly trade margin. I used to trade on MetaTrader 4 using Hugo's Way. That's just not my trading strategy anymore. But just so you guys are informed, there are other platforms beside MT4 that are more specialized for the crypto market if you want to actively day trade and margin trade using leverage, borrowing money. And in these markets, it's very important to keep your risk at 1% or lower, 2% at the highest. Next, spot trading. So spot trading involves financial instruments traded for immediate delivery in the market. So this means if you purchase something, you get it on the spot. So like it says here, the current price of a financial instrument is called the spot price. It is the price at which an instrument can be sold or bought immediately. So unlike options, this is immediate. So this is a way of immediately purchasing something. When I think of that, and obviously with respect to crypto, I think of the number one crypto app is Coinbase. So if I want to purchase Bitcoin, I can just download the app and buy Bitcoin. But also keep in mind, if not your keys, not your Bitcoin. So this is why you want to get your ledger. When I say your keys, that is basically a 24-word phrase that basically. So say if your phone it breaks, drop it in water, or obviously you can you can recover your login from Coinbase. But worst case scenario, the U.S. government orders Coinbase to freeze all funds on the Coinbase exchange. They have to do that. If that happens one day, Coinbase has to do that, and you cannot withdraw your Bitcoin unless you have your private keys. So that's why you want to get yourself a ledger, because worst case scenario, things could happen like that on these U.S. regulated exchanges. That's just a side note. I'm kind of going off track, but spot exchanges like Coinbase, anyways, they allow for you to buy the asset real time, unlike an option, and without leverage. So that's another way. Day trading. So here's an article on Investopedia. I'm putting all this below. 10 day trading strategies for beginners. So day trading is the act of buying and selling a financial instrument within the same day, or even multiple times over the course of a day. Usually this is done using when you're margin trading on MT4, which is the platform you use. And usually what that means is you trade, so that may be like 8 a.m. to 10 a.m. or 6 a.m. to 9 a.m. and during the high volume hours of the day. And you're trying to jump in and out, bag your profit, whether you're shorting, betting that it's going down, or buying, betting that it's going up. That means that you usually trade for a set amount of time every day. I use, Monday through Thursday, Monday through Friday. And day trading basically involves, obviously a little bit more high frequency analysis, jumping in and out. If you're kind of a fast paced thinker, like you make decisions quickly and swiftly, you're kind of spontaneous, day trading might be for you. Or if you're the type of person that thinks through your decisions, you like to, do a bit more analysis, you're the type of person to read reviews, or rather than go on your gut feeling, you might be the person, you might want to stay away from day trading. And day trading is very fast paced, and you have to be very intact with your psychology, your mental consistency to be successful in day trading. And day trading could be on a spot exchange like Coinbase Pro has. There's a platform known as Coinbase Pro. Pull this up really quickly. So it's basically a version of the Coinbase app, but set up more so for the person who wants to day trade. And this is set up sort of like MT4, but specifically for crypto. If you want a full kind of layout like trading view, and you want to be able to mark up your chart, but you're focused on trading crypto, here's like a screenshot here. You can use Coinbase Pro. I highly recommend that. Definitely highly recommend that. And then something else to point out, Coinbase custody. The Coinbase custody is a form of OTC. I guess it's OTC platform for like I said, high net worth individuals, or companies, institutional investors that want to purchase crypto. Coinbase has 3 platforms you can use, not just the Coinbase app. So I'm going to point that out before I move on. Next, HODL. So any of you people that have been on Twitter, pretty sure you heard the term HODL. Basically, it means hold. Hold on for dear life, or just buy and hold. Wait it out. 5-10 years. Usually, that's what it means. It originally came from a typo. Whenever somebody was on the internet, and basically it just turned into, it stuck. It just stuck. So if you guys are interested at all in the long term, if you learn from Warren Buffett at all, he was a long-term investor. So if you want to take notes from some of the greats that have done well with investing, not trading, investing though, the whole HODL strategy and philosophy may be yours. So I will put the link here below. And this basically involves not even trading cyclically, not trading monthly, not trading, even if it crashes. You're like a 5, 10, 20 year, 30-year outlook. And this is, hands off, risk off. You bought your Bitcoin off of exchange like Coinbase and send it to your ledger, secure offline, cold hardware storage, and you're just holding. You're not looking at price, you're not worried about nothing. You're just interested in the long-term prospects, the fundamental use case of cryptocurrency like Bitcoin. And like I said, Ledger is highly recommended. You can also use Trezor. Trezor is another well-known hardware wallet that individuals like to use. Trezor hardware wallet. I will put the links to both of these below. I use a Ledger just because it's easy. Trezor is another good option for you guys that want to store your crypto off the internet. So there's a lot less risk there of getting hacked. So there are other exchanges, not only Coinbase. Like I will point out, Coinbase is centralized. So like I said, if the government orders Coinbase to shut down or to freeze funds, they have a government order. Their company, they're like you and me. They have to do what their boss says. They have to shut it down. They have to freeze it. So I highly recommend you guys get a Ledger or a Trezor. And when you get one of those, you have to basically you can send your crypto from a centralized exchange to directly to your ledger. And then there are other options that allow you to swap cryptocurrencies or trade cryptocurrencies, and that's referred to as decentralized exchanges. And these are types of exchanges which allow for direct peer-to-peer cryptocurrency transactions. They take place online securely and without the need for intermediary, otherwise known as a middleman. So when we trade on Coinbase or where's another one? or an exchange like KuCoin or an exchange like Binance. These are what you call centralized exchanges. So there are, there's an in between. They have basically protocols in place. They have systems in place that basically do the job for us to match our orders. Um, some of them have automated market makers. Anyways, long story short, there's a middleman. There's processes in between you and that other transaction. But with decentralized exchanges, it's direct peer-to-peer. So there's a lot less risk there. Some examples of decentralized exchanges are Kyberswap. I love using Kyberswap. It's very simple. So if I wanted to exchange my Ethereum, usually what I do is buy Ethereum on Coinbase, send my Ethereum to my Ledger Ethereum address, and then on here, so I would usually just go to why is it not working? Let me refresh this. So if I wanted to, if I wanted to buy RSR, I need to obviously RSR is an ERC20 token. So it's built on top of the Ethereum platform, it's built on top of the Ethereum technology. So let's see here. I would just type in RSR. And then, so I'm swapping from Ethereum to RSR. I connect my wallet, put in my PIN code on my ledger, and I swap right here. All I do is this button will turn into a swap button, and I click that, and then the transaction will be broadcasted, and that's it. And like I said, this is peer to peer, and it's literally a swap. So, all right, next, let's go back. You said that's decentralized exchanges. Uniswap is another big one, most high volume one right here. I haven't really used it too much, honestly, but this is another one that does the same job. All right, next, another way to, if you're more kind of, if you come from the stock market and you're interested in like dividend stocks and you kind of just want passive income every month, we have something similar in the crypto space, and it's called staking. So basically, same kind of concept. Like I said, it's very similar to dividend investing, to where you're getting something every month. And this is, so basically you put up a stake, so you have to meet a minimum number. So when a minimum balance is met, a node deposits that amount of cryptocurrency into the network as a stake. And then, so basically you're putting your node to work, you're putting your money to work, and you as a validator receive a reward similar to how a miner is rewarded a proof of work in proof of work chain. So basically, it's, you most of the time they have you at a flat rate percentage. Some are variable, and you get a flat rate, 8% every year APY, 10% APY, and then some of them vary. Some may be 4%. Coinbase offers staking. Certain exchanges offer staking. Some of them require, like I said, like it says here, you just set up a node. There are different ways of doing that. I will put the article here, and you can earn rewards on Coinbase. This article is on Coinbase, so this is obviously a example that you can use right on the Coinbase app, and you can just earn passive income by staking. All right, next, now we're getting into more of what I'm interested in, where my strategy is cyclical. So this is not, obviously it says cyclical stock, but what I'm trying to get out of it is cyclical trading. I basically have experimented in a few areas of trading, such as Forex, stock market trading on Robinhood, Forex trading on MT4, and then crypto trading on MT4 with Hugo's Way, and then buying a hold approach, honestly, and then altcoin trading. So what I usually do is cyclically trade. So cyclical stocks are affected by macroeconomic changes where returns follow the cycles of an economy. So this is more fundamental trading. So obviously, technical trading is involved in any type of trading, because all trading involves candlesticks and price action, the prices of whatever you're trading. And cyclical trading, when it comes to crypto, it usually refers to the concepts that I've learned from this book, honestly, the Altcoin Trader's Handbook. And this basically outlines the way that usually when Bitcoin runs up, the liquidity usually flows into altcoins from the high cap major altcoins like Ethereum, Cardano, Litecoin, and then flow into lower cap altcoins that are a little lower in altcoins, so they're not at the top of the list, and then all the way down to low caps and micro caps. And basically, because these coins have less liquidity than Bitcoin, the upside potential is way greater than it was with Bitcoin, just because of the supply dynamics. So just think about basically, so if you put, say if you have 2 cups of water, one of them is filled all the way, one's empty. In order for you to, if you want to even out the water, you're gonna have to pour half of this water into the next water. So now you have 2 cups with the water at the same level, and basically it's the water level is gonna be halfway, whereas if it was in 1 cup, it was at the top. So just think about that, but multiply it, by thousands, and you'll realize that so Bitcoin's overall market cap is way bigger only because there is that liquidity there to keep that price up. In order to keep, when I say price level, you can think of the water level. So the water level is automatically going to go down because I have 2 cups now. And the more cups you have, the lower the water level will get. So just think that's the supply demand dynamics, and you get into tokenomics there, but they may have went over your head. But in order for a coin to rise in value, there has to be obviously liquidity. There has to be money inserted into that coin, and then there also has to be a minimum level of supply. So that means that whenever a coin rises in value, that means there's more buyers and sellers. So that means buyers and sellers are battling each other, and in order for the coin to go up in price, the price has to go up only through buying, eating up the sell orders. And so whenever Bitcoin's market cap, is starting to, when the market cap dominance is starting to decrease, that means altcoin dominance is increasing. So that means that whenever, a smaller altcoin like Reserve Rights Protocol or DAG or Energy Web or what's another good one? I mean, even I don't want to say it, but XRP went crazy last bull run. You see all these coins that are like way lower price than Bitcoin. You're like, wait, that could probably go up. But you got to keep in mind that there's, like I said, with the water kind of metaphor I gave, they have a lot more cups than Bitcoin has. So for that coin's water level to rise, there has to be a lot more water to get all of these cups at the same level of water. So think of it that way. But long story short, there are a lot more upside potential in certain altcoins because they don't have water. They don't have water. They don't have money. So there are eyes on them. People aren't even looking at these certain altcoins, and it's really you really have an edge over other people. You really have, when you have insight on coins that are on the fringe, like that are controversial to invest into. You want to get into those coins when they're still controversial before they come a consensus investment. Like everybody agrees that, oh, Tesla's a good investment right now, but you didn't make money unless you got in Tesla when it was still controversial to get into it. So it's the same concept. Like a few years ago, everybody was hating on Tesla, but now it's like you are a fool not to be in Tesla. You want to be in certain altcoins before they become credited and respected like a Tesla. So the same concept within the crypto space is valid, because if you're in the top 10 altcoins, usually you've gained a certain bit of credibility, and that's what can happen to some of these altcoins that aren't even on people's radar, that aren't on the number one app, which is known as Coinbase. The number one app is Coinbase, so it's similar to being like on the S&P 500 or on the Nasdaq. Certain companies have that same level of credibility, have that same level of pedigree, but they're just not on that exchange yet. They're not on that index yet. But that doesn't mean that they can't be. So there's a lot of value in researching and finding those coins before they get there. And all that goes hand in hand with how the Bitcoin cycle, the Bitcoin 4-year cycle goes. Because usually, like I said, Bitcoin goes up, and then once it's done going up, money flows from Bitcoin to the altcoins, and usually those altcoins run up even crazier because they have less liquidity and less eyes on them, and then they're undiscovered. And once they get discovered, they get all that credibility, and the price runs up, and the cycle stops, and everything crashes, and it just happens every 4 years. So the last cycle was in 2017, the end of 2017. So we're expecting the next one to happen at the end of 2021. And that was a pretty long-winded. I can probably explain it way better. I probably went over your head, but if you'd like to discuss any of that more in depth, please join the Telegram group below or DM me on any of my social media accounts. KuCoin is another exchange that has a lot of altcoins that aren't on Coinbase yet. That you can find a lot of gems on here. That, like I said, you'll find the next crypto gem on KuCoin. Like I said, Coinbase is the number one app. So KuCoin apps, certain exchanges like KuCoin have way more altcoins that aren't on Coinbase yet. So it's worth getting an account here. I already showed you guys Kyberswap. Yield farming. So this is probably the most in-depth way of earning money on crypto. And yield farming is any effort to put crypto assets to work and generate the most returns possible on those assets. So you can think of it similar to staking, in the sense that you're just putting your money in a certain asset, locking it in, and you're able to earn a certain APY. You're earning a certain interest per year. And some of these yield farming situations can provide 10x gains over a year, like like really good percentages. I'm talking, you get 100% APY, or you can get 50% APY. Sometimes you can get more than that in other cases, but it's really risky though, because sometimes if so it's really, honestly, really complicated. I don't do it because it's super risky, but you can lose your money when you're trading on yield farming whenever you're investing. And these you can invest in certain what's it called, like yield farming situations that basically, and so it's arbitraging the different lending percentages. And it's really complicated, but I would not I wouldn't recommend doing it if you're a newbie. But if you have money to blow and you're okay with losing it, go ahead and do your research. I can put a link actually down below. DeFi Dad has some really in-depth videos. Yield farming is very risky, but just think of it as a high risk way of staking, or a high risk way of getting high percentage yields. So I think that's probably the most complicated way of earning passively in the world, honestly. And then Binance is another exchange that you can trade altcoins. And this is just buy and sell on spot. You can do margin on there. Derivatives, do not recommend doing those, but that is another way of trading. Perpetuals. There are perpetuals here. Perpetual swap is an innovative product invented by BitMEX. Perpetual contract is similar to traditional futures contract, but it has a few differences. So there's no expiration date. That's primarily the main way I think about. So you're just trading it. There's no expiration date. So I just think of it that way. And on BitMEX, they're pretty controversial, so I don't recommend that either. So with that, press that like button, press that subscribe button. If you guys have any other questions about any of these trading strategies, please let me know. And with that, I'm off.